Don't do it. If you are thinking of getting an RRSP loan, think again. Did you know 8 out of 10 times we could be doing the RRSP loan wrong? So in today's video, I want to give you the pros and cons for the RRSP loan and why I usually don't recommend RRSP loan for the average Canadians. Hey, this is Thomas, here to help you make better choices on your retirement, wealth, and insurance. My goal is to make sure you can take 1 or 2 ideas home and start making smarter financial decisions today. If you find value in this video, make sure you smash that subscribe button so you know when a new video is out. Right now, as we are entering the RRSP season, where you will see lots of banks are promoting RRSP, and for sure, they also will tell you about the benefits of getting an RRSP loan. The banks make RRSP loans sound very attractive for everyone, but the reality is that an RRSP loan is only beneficial to a few people. So are you someone who will benefit from an RRSP loan, or is it better for you to stay away from it? Let's dive in to find out.
An RRSP loan is an example of borrow to invest. It's a special loan that you can use towards your RRSP contributions. From a consumer's perspective, an RRSP loan is attractive because it's easy to approve and the interest rate is often pretty low. The idea is that you take on the loan, put that money into the RRSP, boost the tax return, and then you take the tax return to pay off a portion of what you borrow. What's more, the first payment is usually deferred by 90 days. Meaning that if you take an RRSP loan in February, which is before the RRSP deadline, you can generate a tax refund in April to pay down a huge chunk of your loan. So RRSP loan is an option that gives you a better tax return as well as some time. And let's go for an example. Let's assume Jane is in that 40% tax bracket. She has $10,000 and ready to contribute to her RRSP before the deadline, and she still has $50,000 of room for her RRSP. What Jane could do is borrow an additional $40,000 from the RRSP loan to top up her RRSP. In this scenario, she can get $20,000 back in tax returns, and now she can then use the $20,000 towards her loan and pay off the remaining $20,000 over the course of the year. And now she has $50,000 in her RRSP account. Perfect scenario. An RRSP loan is especially useful if you're in the following 2 scenarios. 1, if you receive a sudden huge bonus or paychecks, or 2, if you're coming close to retirement and have a lower income. In these 2 cases, an RRSP loan can help you to defer tax, top up your RRSP contributions, and save income for your retirement. Now, let's have a deeper look at some situations where an RRSP loan may not be ideal. In the past 10 years, I find that people who use an RRSP loan find themselves in endless circles of borrowing and pay off debts, so more harm than good. I'll go over 3 major drawbacks of the RRSP loan, and I also want to talk about alternatives to the RRSP loan. This is the core problem with RRSP loans. Usually, someone doesn't have enough money to contribute, so they end up borrowing. But now they are busy all year paying off the loan. Next year, in February, they are in the same situation again. They don't have enough money to contribute to their RRSP, so they take another loan and they are playing the catch up again. Usually, the banks can offer the loan period up to 2, 5, or even 10 years. That also means you're using 2 years to pay off 1 year of the loan. Remember, the essence of an RRSP loan is to top up, not to play catch up. The problem here is a behavioral aspect. If you don't have the discipline to contribute to your RRSP regularly throughout the year, then how do you expect to stick to a loan payment over the next 12 months? And if you do have the discipline, try not to use it for the RRSP loan. Instead, contribute to your RRSP account regularly throughout the year. For your RRSP loan, you have to pay both principal and interest together per month. If you want to get a mortgage, for example, the bank will look at your TDSR. TDSR stands for Total Debt Service Ratio. This is the percentage of your income you're allowed to use for housing or car lease payments. It refers to the portion of a borrower's gross monthly income that goes towards repaying the monthly obligations, including the loan being applied for. Usually, the magic number is 40 to 44%, meaning your monthly debt payment cannot be 40% more of your monthly gross income. Using the previous example, let's say you're paying $2,000 a month to pay off the RRSP loan, and your income is about $10,000 a month. That means the RRSP loan is eating away 20% of your TDSR. Sometimes an RRSP loan may not be reflected in the credit bureau, but would you like to take that risk when you're applying for your next mortgage? What's more, an RRSP loan limits your cash flow for the next 6 to 12 months because that is the usual time frame to pay back your loan. Think about it. Even if you only need to pay $250 a month towards your loan, that's $250 you cannot use for anything else. What if something unexpected happens? Any extra payments around the house or car repairs could be a risk to you. In the end, you might have to borrow even more money, like a line of credit or own a credit card balance, and those interest rates are much higher. Or you have to take out from your RRSP again, which adds on your this year's income. As you see, an RRSP loan can quickly turn into a vicious cycle, so be smart about it. Okay, as you probably can tell, I'm a person who also believes in borrow to invest. It's just that an RRSP loan is probably not the best idea in many situations. But what can you do instead? Let me go over some of the alternatives. If you need to top up your RRSP but you have no additional source, you can take out some of your tax-free saving accounts and top up your RRSP contribution. Unlike RRSP, the room for tax-free saving will reset after the calendar year, so you can take it out on December 31st and the tax-free saving room will reset on January 1st next year. Another choice will be using a home equity line of credit. The interest rate will be similar to an RRSP loan and is interest only, so it will not take away too much of your TDSR. But for sure, you need to have a property in the beginning. Or you can consider a leverage loan. I mentioned this concept a while ago, so I won't go over it now. You can click at the top for more details. Neither way, before you proceed, talk to a professional to make sure you're fit with the strategy. Before we end this video, I want to leave you with some final thoughts. Please understand that an RRSP loan can still be a very good idea in some cases, but before you take out the loan, ask yourself, why are you doing an RRSP loan? Is it to get more tax refund, or are you simply seeking for an investment opportunity? Are you playing top up or catch up? And finally, what's your overall saving strategy? Be aware that especially during RRSP season, banks are playing to our needs of instant gratification with their well-timed RRSP marketing. But an RRSP loan isn't necessary if repaying a loan doesn't fit into your financial plan, or if you already have discipline to make regular contributions to RRSP throughout the year. Now, I'd like to hear more from you. Do you have any experience with RRSP loans? How was it for you? Finally, if you like my videos, make sure to subscribe to my channel and let me know what kind of topic I should talk about in my next video. I'm always open to hearing your suggestions or questions. This is Thomas, and I will see you in the next video.